Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Accountant's Minute, our 389th edition. Our feature story today is on Business Plus, empowering advisors for SME success. SME success is a dream for some of our clients at present because of high interest rates, high inflation, and look, a lot higher number of business failures. In my opinion, as an experienced accountant, both a senior partner of an accounting firm and as the Chief Financial Officer and Company Secretary of a listed public company, and an advisor to a major Australian government program called COMET, Commercialising Emerging Technology, which was to assist SMEs who had developed some new technology, some new ideas, some new processes to be able to get themselves investment ready, to be able to raise capital. And the only section we had to be able to raise capital then was under Section 708 of the Corporations Act. So it was prior to crowdsourced funding, equity raising, and early stage innovation company. So with my experience, when I look at the SME scene at present, I honestly believe that our profession, accountants, have to supply more business-related services to assist our SME clients to survive and thrive. Our SME clients need financial and commercial advisory services, in addition to taxation, because the taxation return does not assist them to prepare their records, their information, to give them their knowledge they need day by day to manage their businesses more effectively. I think that's the challenge for accountants as we look at the start of a new calendar year in 2025, because there's a lot of problems around. Jerry Harvey, the 60-year-old veteran, or the 60-year veteran, of the Australian retail industry, wrote an article in the News Limited media a week or so ago and indicated that in his opinion, the next 5 years is going to be very difficult. And in 2029, it could be very difficult for SMEs. Or maybe he meant 2030. Whatever it is, his forecasts are showing that there's a lot of problems. What do we do as a profession? How do we react to that? In this edition of Accountant's Minute, I'm going to take you through the strategies and the way I think accountants can respond to these challenges. ESS BIZTOOLS' role is to empower the advisors who are our subscribers, the accountants and bookkeepers and business advisors. And we do that by producing a number of things, including the Business Plus newsletter, which is produced each month and contains 4 to 6 articles to help SMEs at various aspects of their careers. Some are starting off, some have been in business for 6 to 12 months, others have been in there for 10 years and more. So some of the clients are thinking about just starting up and surviving. Others are looking at research and development and developing new products and services, so they're ready to go on the innovation journey. Others are looking at possibly buying another business or selling their businesses or starting to plan retirement and looking at succession. Some of them are looking at how much money they're going to have in the future and they want to expand, but will they have enough money? Who's there to help them with these analyses? Do they need to try to raise some capital? Are they aware of crowdsourced funding, equity raising? And for those young, innovative companies, do they understand how the early stage innovation company process works? Do they know that their investors receive a bonus, an incentive payment from the Australian government for investing with them? That's subject, of course, to them qualifying as an early stage innovation company under the definitions, and that goes through the tax office and Oz Industry. But do people realise all this? There is infrastructure already in place that, in all honesty, I don't think as a profession we have driven hard enough to help our SME clients to understand what is there and to help them to get ready for this. They need business plans that are reviewed and updated every year, that each business plan has a specific action plan, the call to action to be considered each month at their monthly senior staff meeting, their leadership team meeting, to discuss what the issues are, what they need to do. They need budgets and cash flow forecasts that are out in front 6 to 12 months and more, but it's that 6 to 12 month period that can be quite vital. Because if you've got clients who are importing raw materials or products from somewhere overseas at present, in the Middle East or Europe, there's a strong possibility that there's delays because of the wars in Ukraine and Israel. And now we've got the uncertainty in other parts of the Middle East as well, haven't we? By preparing real accounting data for your clients, you'll give them the chance to avoid some of these problems because you've shown it to them that they're going to have a problem in 7 months' time because of build up an inventory that they've deemed that they have to. What's the drain on cash flow? And what can you then do to help them to overcome those problems? That's the theme of this edition of Accountant's Minute that I want to talk to you about. So we believe that you need actionable business insights that you can be talking to your clients about. That we need a resource that's ready for you to use, that's robust, that's been through the trenches a bit, that's had some workouts, and any material that I'm suggesting to you has had real workouts with real clients. You need to be positioning yourself as a thought leader in the new regime to help SMEs. And that's the supply of financial and commercial services. Because just about everything I've mentioned so far is either financial or commercial, not taxation. As important as taxation returns are, they do not help your clients at all in the day-to-day running of their business. They need information more regularly than in some distant time after the 12 months financial year is over, and it might be 6, 8, 9, or even 12 months later before they get that report. How can that help them run their business when there's things happening every day? So that's the challenge as I see it, as we open up with this overview in this podcast on Accountant's Minute. So we will just give you now an overview of what's contained in our issue number 247 of Business Plus. We've been writing this newsletter for 17 years. Its prime aim is to discuss issues generally beyond taxation with your clients, but we write it as a shadow. It goes out in your name if you're a subscriber to ESS BIZTOOLS. And your clients hopefully will read all the articles, 4 to 6 each month, but hopefully something will set off the light bulb in your client's head and say, gee, I must talk to Mary or Jimmy about this. And that's what we want. We want them to come and talk to you about some of these issues. So let's go through this Business Plus. We look at the implementing strategies to succeed in 2025. And I've talked about some of those already. But one of the big issues that I haven't commented so far, I don't think, is financial literacy. The MYOB CEO, Paul Robson, wrote a report which was published by the Financial Review back in February this year, in which he highlighted that MYOB had conducted interviews with 1,000 of their clients and found that there was very poor knowledge of fiscal issues. And he singled out a few of those. Debtors, people not understanding debtors' terms, the need to indicate the payment date on tax invoices, the need to be prompt and thorough in following up, the need to ensure that all of the requirements from the customer to go with a tax invoice were undertaken, and also the need to make sure that the tax invoice reached the customer before their cut-off date, which your customers will tell you. And if you don't get it into them by the 8th, 9th or 10th, whatever it is, of the next month, well, they won't look at it until the following month. So your client gets blown out in the collection of debtors. And what I suspect MYOB found is that a lot of new people going into business assumed that everyone would pay them on a 30-day basis. How many accountants told them that that is not right? How many accountants told them that Australia holds a very dubious world record of having the longest debtors' days outstanding in the world? I think it's a national disgrace. But it was an award given to us a few years ago. And on my observation of current debtors' days outstanding figures that I see from clients and what I read about, I don't think it's changed much. The then Australian Small Business Ombudsman and small advisor, Kate Carnell, called it a national disgrace. And the Morrison government immediately said they would do something about it. And the Albanese government has done something more about it recently, where they're going to try to shame big enterprises that don't pay on time. I really think they should be shaming state government and local government departments and councils and even federal government departments, even though the Treasurer and Prime Minister say they're going to pay on a 30-day basis. SMEs tell me they're not doing so. And recently, Jerry Harvey, the long-term chairman of Harvey Norman, indicated that he thinks the next 5 years are going to be very difficult for SMEs. So let's look at what we think you can do. First of all, you need to embrace the concept of the 52-week business enhancement system. You need to take off your tax advisor's hat and think with a commercial financial hat on. First of all, you need a proper due diligence review of your clients. Where's the weaknesses in their internal control system? Who's got responsibility for raising purchase orders? Who authorizes the payments? Who checks the goods in? You need to gain an understanding of your clients that is 1 inch wide and a mile deep, not a mile wide and only an inch deep. You need to have that knowledge. And I submit to you that if your role up to this stage has been basically preparation of an annual set of accounts and a tax return, you do not have a 1 inch wide and a mile deep knowledge of your client. I found out that many years ago when I left accounting and took a position in a public company and ultimately become the chief financial officer and company secretary of that company. I had to learn a lot more about my new client, which was my direct employer, than what I ever knew about the clients that I was preparing tax returns to previously. And the speed of requirement of information was very obvious, because key performance indicators, business metrics, what happened yesterday, were key bits of knowledge that were needed by the leadership team. Not something that you might give to them 6 or 7 months after the end of the financial year. It meant nothing then. The business plan. Business plans are like maps for tourists. If they don't know where they're going, they will get lost and they won't know where they are. It's the same thing in business. We need a business plan. But if you're offering these types of services, there's a leadership team. It might only be 1, 2, 3 people. In some cases, it might be half a dozen. In public companies, it's 10 to 20 people in the top leadership team. But an SME's got a very small leadership team. And normally there's not a direct accounting person in there to give them that advice, which they need for what-if type questions. So the business plan, I believe, should be prepared as a joint effort. Every leadership team member should have a say. Give them back a draft. You're not the preparer of it. You are the facilitator of it. You will raise a lot of questions. You will make a lot of suggestions. But at the end of the day, it's got to be their document because they are the team that have to implement it. And once we've got the business plan and they've signed off it, I think it's a good idea they sign. This is our plan. We are going to implement it. We then move into the predictive accounting reports, where we're going to look at budgets for each business operation. Please don't consolidate them all into one. That means nothing. We want it broken down so that your clients can clearly identify a problem area because you're showing them it's losing $100,000 a year and everything else is trading profitably. Why? Why keep that business? There could be very legitimate reasons, of course. There could be tactical reasons, but you need them to face it. If it's all hidden into one P&L, that sort of evaluation is not available. And over the years, I've been retained to go in and dissect the business to try to find out what was causing the problem. And it always is with someone that's got a consolidated profit and loss account because that's how they do it for tax. For business operations, we need to break it down as far as we can into individual components so that they can be evaluated. And then we need the key drivers. The key drivers are the key sub-accounts in this process, not hiding them anywhere, but it's the inventory of raw materials, inventory of stock, debtors, creditors, capital expenditure, export market development grant, or export market development expenditure. Hopefully we'll get the grant for it. And those other key items that should be analysed and looked at so that the leadership team are familiar with the investment that's in there and saying to themselves, well, how can we reduce that? Because we know we're running out of cash because it's tied up in inventory, it's tied up in capital expenditure, it's tied up in preparing our marketing strategies into a foreign market. And then we have the cash flow forecast. Of course, it all starts fitting into pieces then, but how's it go? But more importantly, what is the cash flow forecast telling us is going to be the position in 6, 7, 8 months' time? Is there going to be a problem because of the necessity to build up stock? And the payment terms that our customers are taking. The projected balance sheet is a great document. It allows you to be the storyteller, to say to your clients, this is what this business is going to look like in 3 years' time. 3 years, I think, is perhaps the maximum you can go forward with any sort of confidence for a SME business. And then we have the statement of source and application of funds. Daily reports are important in all businesses. The big end of town do it very well. We need to introduce a daily report system so that your client and the leadership team have in their hand the key data for what happened yesterday. And it can be things like bank balance, how much money come in, how much money went out, what's the big payments got to be made this week. But it might be the gross profit percentage, the average sales, the number of customers, how does it compare to estimates or previous same day last week, and all this type of stuff. That means a lot to the recipients of that information. But it's an accounting process in most larger businesses to get that information prepared. Therefore, if we're going to adequately service our SMEs to help them survive, we need to implement those reports, not necessarily prepare them, Just make sure they are being prepared, and make sure if any of it looks wrong that you inquire and get it fixed. That's your role. The weekly performance and profitability estimates are vital. That's what the big end of town do. It's how they run businesses. I found that out to my own experience when I got into a public company, and I thought, wow, I've been acting in the accounting firm I'd been employed at after I finished my studies. I've been involved there with clients that are very similar to some of these activities that the public company I was running had. In fact, some of our clients had a larger turnover than what some of these individual business units did within the public company. Yet that individual business unit within the public company, the manager there knew by Tuesday afternoon what their result was: gross profit, sales, gross profit percentage, labour to turnover, average sales, etc., as compared to budgets. Whereas the clients that I'd previously acted for just knew, okay, the amount of money they'd banked. They might have known the average sale, but we didn't prepare it for them as accountants. It wasn't part of our brief. We were there basically to, at the end of the year, prepare their tax returns. It's not enough. They need more information. They need to be able to basically run their businesses on the weekly performance reports. And what's the big benefit? The big benefit is if there's a problem and they understand that problem through things like gross profit percentages. They say, geez, we expected 36% and we've only got 23%. What caused that variation? That's what they then investigate. The leadership team go in and find out what was wrong. Someone made a mistake. The stock take wasn't done correctly. Some special buy that they'd made didn't turn up in time to be sold that week. There could have been fraud. Unfortunately, it does occur at times. But they can immediately fix it. The problem with the tax-driven system that most of our SMEs are working under is it's probably a year later that anyone starts asking questions, and it's then too late. Your response then might be, gee, your gross profit percentage was a bit low this year. Last year we got about 35%. This year it's ended up only at about 26%. It's too late then. No one could go back then and revisit it. Then we have the monthly financial accounts, all individual businesses. I don't care how many businesses your clients have got, 20, 30 P&L. Now, at the end of the year, if you want to do a consolidated run and put it all together, it probably makes it easy to do with the taxation side of it, but it doesn't help run the business. And then we need a variation from budget report that's put through the system. And you can then write a report to the board of directors or the board of advice, which hopefully your client's got one or the other, and say to them, well, this is the result. And these are the variations. And here's the analysis of things like debtors' days outstanding, creditors' days outstanding, because those things mean something. If you're budgeted for debtors' days outstanding to be 30 days and they're currently sitting on 61 days, your client's got a cash flow problem. So what are you then going to do about it? What's the leadership team going to do about it? Unfortunately, unless there's someone crying fire to them and saying there's a problem, in lots of cases, nothing happens. I can assure you that's the role that goes on in bigger organisations. I was one of those guys that occasionally had to yell fire. There's things that need to be fixed. And part of this analysing the cash flow for going forward, of course, might be that we need to raise some capital. Crowdsource funding, early stage innovation company. The next item we got is fiscal management improvements will save businesses. Well, that was the substance of Paul Robson, the CEO of MYOB's comments, and I think he's right. We need to make sure our clients understand these things. And I think if your client's not going to take that responsibility, you should say to them, well, if you're going to be our client, we will do that work for you and it will cost you this amount of money. Now, I got some of our subscribers who are performing the virtual CFO role for fees, annual fees of $40,000 up to $100,000 that I know of. And someone told me one day that they're charging more than that, never actually told me how much. So SMEs are prepared to pay these fees as long as we deliver the services. And they're going to be value-added services. There's no use just telling them that everything's balanced. We need to be bringing our brain to the table and delivering services to them. Setting charge-out rates is important for achieving targeted profit. That's our next article in this special edition of Business Plus. I don't think many of our tradie clients get their charge-out rates right. Some do, of course. They become very wealthy men or women. But making sure they've brought in the labour on costs, the labour budget's been properly prepared, the overhead expenses have been calculated reasonably well. If they're making purchases for clients, and most of them are, what markup do they want to apply to it? And then what happens to that markup? Do they want to keep it as a super profit? It's okay. Or do they want to subsidise the charge-out rates or use part of it, say 50% of that surplus to subsidise the charge-out rates? But at the end of the day, we need to have their profit target, because that's what this whole exercise on charge-out rates is all about. What charge-out rates have got to be inserted to achieve the profit. But then you need to check it each month. So we need the key performance indicators. What were the individual productivity figures of the team members? Did they vary from the original budget that we've calculated on for the charge-out rates? And then we need to vary them. You can't change quotes that have already gone in, but perhaps you can change how you're going to do your quotes in the future. Research and development, the commencement of an innovation journey for many businesses. It is indeed. Now, I'm not going to say that every research and development project ends up being financially successful for your clients. Obviously, it doesn't. That's why the government supplies financial support for research and development activities. But some are successful, extremely successful, in developing new products or services. They can then elect to sell themselves or to license the technology to someone else that's already got a big flash factory and is looking for projects and will pay a percentage, a royalty type payment to your client. Many businesses do it. You could help them do that. To get there, though, they need to understand the research and development system. They need to then understand the documentation that's required, because your role, as I see it, is the internal auditor in the research and development process. You're not the inventor. You're not the person undertaking the experiments. As a couple of accountants have said to me over the years, "Oh, we can't do that." I said, "Of course you can't do that." Your role's more as an internal auditor to make sure the client's completed the forms, the paperwork and everything else that has to then be submitted in the return that goes to Oz Industry. But don't leave it for 10 months after the end of the financial year. There's a real build-up at that time of the year. Try to make sure it goes in as soon as possible so you get the Oz Industry document number that you can put into the tax return and get it lodged and get the client their research and development tax offset. So that's research and development. And our system includes full processes. We've got 13 flow charts in the system on R&D to help you to explain to your client how this whole thing works. 13. We've got 46 separate forms, but you'll never use them all on one client, I don't think, but you might. We've got 13 separate papers, so we've broken it down into readable chunks. We want people to be able to read this in about 10 minutes, 15 minutes on a particular area. Not say to them, you've got to sit down now and read for the next 2.5 hours. It won't work with SME clients. They're busy, their phones are going, the computer's got messages for them. Someone's standing at the door waiting to know what the next job they've got to do. Just doesn't work. And fundraising by SMEs is growing in popularity. It is, but it could be a lot more. We could really help our SME clients. And I'm not being Santa Claus, but we could help them by being far more proactive in this process of identifying that they need business plans, predictive accounting reports, so that highlights potential problems at some future date. And then talking to them about how they're going to solve that problem. Is it going to come from borrowing money? Do they have the money to borrow? Do they realize, of course, they've got to pay interest and they've got to repay that? Or are they interested in the capital raising opportunities that are available for SMEs? Crowdsource funding, equity raising? Sure, it only applies up to $25 million turnover, but that's probably a lot of your SME clients. And if it's a higher turnover, well, there's venture capitalists. They're a bit more difficult to deal with, difficult because they understand business. They've been down this road before. So it's highlighting the need for you to talk to your clients about corporate governance and boards of directors and boards of advice. It's all part of the preparation. You know, we started going to school, going to kindergarten, and then primary, and then high school, and then to college or university. Running a business is nearly the same. And we need to make sure we are offering services to our clients that work with them as they go up to the next level. Some of our clients are really wanting to scale up. Scale up's a terminology that came from America about 10 years ago. And there's been some very interesting books and great discussion groups in Australia looking at it. I'm firmly committed to the concept of scaling up and helping people to scale up. But they've got to learn a lot. They've got to drive their businesses. You can help them because they need an accountant. I've never come across a successful business person yet in bigger companies that hasn't got a key financial advisor. Normally an accountant. Not always, I must admit, but normally. But that person's role is to help on the financial commercial matters, to help the client grow. So that's my overview of where we're at with Business Plus. That's the summary of what's included in the December edition. You can gain all this. You can download it off our website. Please go to www.essbiztools.com.au, and on the top bar you'll see Accountant's Minute. Click onto that, and then the first one on the left hand side that's there is edition 389, and it will give you the access to the Business Plus, and you also get access to 6 papers or forms that we've prepared that relate to those key items that I've just discussed. And you can have that with our blessing at Christmas. And if you're interested in having a further discussion, we would love to hear from you. You can send me an email, peter@essbiztools.com.au. You make a phone call, 0747241118. And we can have a complimentary Zoom discussion, 20 minutes, 30 minutes, and just go through. You can tell me a bit about your firm. I can tell you whatever else you want to know about ESS BizTools, and I will give you my opinion as to how I think you could start the delivery of financial and commercial advisory services to assist your clients to survive the challenges that are racing down towards them in 2025, and according to Jerry Harvey, for at least the next 5 years. We need to make sure we can assist our clients to survive. Merry Christmas, and I look forward to talking to you again in 2025. Stay safe. Goodbye.